Rory Green is the Chief China Economist for independent investment research provider TS Lombard. Good to see you, Rory. Welcome back to the programme. So, will this plan to increase foreign investment in China work, do you think?
I think it's a good start, and along with the improvement we're expecting to see in the macroeconomic environment, which is of course a massive factor for prospective investors in China, we are expecting an increase in the domestic demand side of GDP this year, which is really critical to pull in foreign investors. I think those two combined, and we will see a better environment for FDI into China over the next couple of years, certainly compared to the last few.
So what challenges do you think investors might still face despite this plan being brought in?
Yeah, as I mentioned, the growth factor has been a big challenge in the last couple of years, and the returns on cash as well. So big hurdle is growth relative to the pre-COVID economy. The domestic market has been relatively sluggish. It's been exports powering growth. And this year we'll see improvement on that side with investment and consumption picking up, helping to pull in investment. So that'll be critical. And the other factor when looking at FDI is what companies can do with the money they make in China. And when interest rates are high, the RMB is strong, that money stays within the PRC. Over the last couple of years, the dollar has been exceptionally strong, and rates outside of China have been very high, certainly relative to the PRC, and that's pulled money out. And that's still the case, with a bit of a hurdle on that front for China to overcome, but at least on the growth side, we're looking at a much better environment.
Well, one new factor, if you like, US tariffs, of course. What role might they have to play in foreign investments in China?
Not just for China, but for everyone. It's a huge source of uncertainty at the moment. And until there is clarity on how high the US tariffs may go or whether a deal could occur with China, it is going to delay new export-orientated investment into China and many other economies as well. But of course, China under real scrutiny. For investment that is targeted to make in China for the China market, tariffs shouldn't have much of an impact. But the export side is really where we're looking for some damage there.
So the overall number's down, but we did see some countries increasing investment into China, the UK among them. Why was that?
I think for the UK, we are highly compatible with China's current stage of development. We are excelling in service exports, finance, law, architecture, whereas China is predominantly a manufacturing powerhouse. So very compatible economies, relatively few areas of direct competition. So the avenues for UK investment into China remain pretty strong at this stage.
Rory, good to talk to you. Thank you so much for coming on the programme. That's Rory Green, Chief China Economist for independent investment research provider TS Lombard.
Thank you.